Hello, everybody. Welcome to today's episode of The Daily Dose. Today is Wednesday, October 19th. And if you're wondering why I'm starting here instead of the market recap, it's because we talked about this the last couple days. Even though the bank earnings were beating expectations, it didn't mean that the biggest companies in the indices were also going to beat expectations. And we knew that when big tech earnings started coming in, that was really going to sway the market. And after the close today, we got our first big tech earnings call from Tesla, and they missed, and they went red, and the market was already red on the day. They're a big company in the S&P 500, and I'm sure that the market will react tomorrow and in the following days through the end of the week, Thursday, Friday, because next week there are some big tech that start reporting. And if this is any indication of how that's going to go, then the market is going to have a little bit of a fit, because that's not what they were expecting the last couple of days when we were green. So Tesla, they missed on revenue. They actually beat on EPS, but the bottom line missed, or the top line missed, rather. And so I just wanted to bring that up because this can be the start of something for this earnings season that could push this market to the next leg down if the big tech earnings next week also miss. You saw Tesla's down about 5% after hours after being green on the day. And the market will not like it if Apple, Microsoft, Amazon, Alphabet, if those companies also miss or they disappoint. There's literally nothing that can push the market up. Nothing. Earnings are missing. Inflation is still sticky. The job market is technically still strong according to their metrics. And all this is pointing to the Fed continuing to be super hawkish and to continue to tighten as aggressively as they have been in raising interest rates. And there's really nothing you can look to push the market up. Even in Taiwan, China said that they're accelerating their plans to seize Taiwan. Russia is allying with Belarus. They're sending troops to Belarus for the war in Ukraine. There's nothing in this market right now that can push it up. And we're putting pressure. Let's take a look right now, actually. We're putting pressure on this low in the market, and it's just not a recipe for a rally. That's not to say we can't bounce off this zone again and go into an end-of-the-year rally. I will say at the end of the year, historically, you do see rallies. And in midterm election years, you see a heavier rally through the end of the year. So we have that seasonality factor playing into the bull case. We're also sitting on a support right now, so you could make the argument that through the end of the year we could rise, and that could happen, but the market has tried to do that twice now. And if you look, we have a high right here, and then we have a low, and then we have a lower high, and then a lower low, and now we have a lower high again coming through here, and that could lead to a lower low. So it does look more bearish than bullish, and fundamentally there's not really anything that can lift it up. So that's what I'm thinking. Obviously, I could be wrong. Do your own research before you make an investment decision, but let's talk just a little bit about the technicals. So we were down 0.67%, but the trading today was actually really tight. We kind of gapped down in the morning, which was where we pretty much got all our losses, or most of our losses, I guess, because we did have a little bit from the open to the close, but it was really tight. We got to the top of this level here, and then we rejected it, and we came back down. We even got as low as right in here, and we came back up. So, it was tight, and usually when you see this type of a candle here, when you have a big wick, and then in the middle, just a little bit of tight action between the open and the close. Usually, when you get a close that breaks above the top wick from that day, it'll be pretty a bullish signal. And when you get a candle that closes below the bottom wick from that day, say it happens like tomorrow on Thursday, then that would be pretty bearish. And that's what I'd be looking for technically on this chart. But fundamentally, again, there's not really anything that could cause a change of trend. Let's bring in the 200-day moving average, even though we're not close, because I just want to start getting into the habit of looking at it every day now that it's underneath our trend line. And that could act as a form of dynamic resistance if we get back up there and touch it before we get to this trend line. So again, that's what I'm looking at on the S&P 500. For those listening to the podcast and want to hear out the levels, so the zone that we're in right now is from 3720 to 3635, and that 90 or that 85 point zone is where we're at right now. We rejected off the top of it. We're kind of just sitting in the upper third, and if we break below this candle from the 13th, that huge green day, this level of the 3250 is definitely in range on the S&P 500. But let's take a look at Bitcoin. So Bitcoin's doing what we expected, but it's taking a little bit longer because we had some of that chop in the markets, I think, and that really factored into it. And it went through this trend line, but it's not showing any strength, and it's actually showing weakness. And we suspected that this is what would happen, and now with the market kind of turning back over, you see Bitcoin turning over harder, and we're sitting on the top of this zone, so we're just above 19,000 right now on Bitcoin. And I'll say it again in case there's anyone new watching or listening this episode. The 17.5 to the 17.7 is our last area of support, and after that, we're headed to the 9,000 to 12,000 range. There's really no support until we get down to that level. So, again, it's important to have this mapped out on your charts or to be aware of it on Bitcoin, because when we do break through that level, I will be watching it like a hawk waiting to get in at 9,000. If we break below 10,000, I'll load the boat on Bitcoin. I know that there will be a lot of people loading the boat on Bitcoin if it gets below 9,000. I've even heard people saying that it could get down to 3,000 or 4,000. I don't know if we'll get down that far. That's a little bit extreme. I think 9,000 is right in the sweet spot of about 85% drawdown from the top, which is typically what you see in a crypto winter for Bitcoin. So I don't know if we'll get to 3,000 or 4,000, but if we see something really, really extreme in the stock market or a really, really big event, some kind of military conflict that seems to be escalating, that could be something that pushes us down to that level. But as of right now, I wouldn't bet on that level being hit. But that could change, and I'll keep you updated on the channel. So if you like this type of content, be sure to subscribe on YouTube and follow us wherever you listen to podcasts. I release one of these episodes every single day that the market is open, and every weekend I release an episode of the weekly wrap, which goes a little bit more in depth, and it's a longer episode, typically between like 30 and 45 minutes, whereas these are anywhere between like 5 and 15 minutes. So be sure to tune into those, and those episodes also go more, they just cover more than these do. This kind of just hits your basic points for the day. So be sure to stay tuned for that. That's all I have for you today, though. So I do appreciate you tuning in for this one, and until next time, thank you for listening.